Right. Good afternoon, everyone. Thank you, Bishop, for the opportunity. So today, basically, we are going to be looking at volume, and I want to assume that everybody on this body on. I'm not really going to be going into that. So this the trend is going to continue. How do we know if there's a possibility of a trend reversal? How do we see manipulation when it is going on? Now, these are the things we can, these are the things we can look out for, we can notice through studying volume. So we are basically looking at if the price movement is supported by volume, right? So if price is going up, the nature, if price is going up, we naturally expect that the volume should be what? In up in the positive direction. All right. So if more people are buying, what we are saying is that people are bringing money into the market. And once we start seeing a disparity between what volume is doing and what price is doing, we can start anticipating a reversal. So from that time, even though we are still trading in line with the trend, with the existing trend, we'll start being very careful, knowing fully well that there's a possibility that price or the trend is about to do what? To reverse. And see if the trend wants to reverse, or then it just goes back the other way and continues. So these are all things we get to find out in our study of volume. So let me just do something quick, just show us some examples or illustrations before we delve very deep. For instance, AUD, USD, out yourself so that you don't distract him. Uh, Please mute yourself once you join the call. Thank you. All right. So this is ADUSD. ADUSD predominant trend has been what's up. What do you notice? A disparity in what volume is doing and what price is doing. What do you expect? The possibility of a coming reversal. Everywhere. This was one AUD card. This was the only trade that paid me last week. All right. So you will always see things like this happen. A disparity in what volume is doing and what price is doing, and it begin to. All right. So to look at this, well, I'll just explain using examples. There's no big deal to it. So in studying this, I normally use my CMF indicator, that's the Trican money flow indicator, and I like to have occasionally the OBF, that's the unbalanced volume. I like to have the unbalanced volume there as well as a means of confirmation of what I am seeing on the CMF. But basically, my CMF indicator is the main indicator that I use for studying this. So before one of the biggest, most successful traders we've had in world history is a man called Bill Williams. And Bill Williams proposed something that if price is going to reverse, if a trend is generally going to change, you're expecting three things to happen. Then the price should start decelerating. That is, the momentum should start going down. And then finally, you are going to have a change in the trend. All right. So for any trend to change, you're expecting three things to happen. Volume will start moving in the opposite direction. Then you expect a deceleration. That price will no longer move as quickly in the direction it has been moving before. So normally he gives an illustration of like when you're rolling or trying to push a car up a hill. He was a doctor of physics, mathematics, and all those things. So when you're pushing anything up a hill, it gets to a point where the effort that is required to push it up becomes so the hill more than a certain point. So what happens? You find that maybe when it was still a little bit just very small, you can just be pushing it very easily. But the higher you climb, it becomes more difficult, more effort is required. So what happens? You're no longer moving as fast. But it will get to the point if you keep pushing it where your strength can no longer sustain that um, basically have. Get the odds and all those things, Bollinger Bands. What you're just looking out for is the CMF, all right, the Chicago Money Flow Index. So that's indicator, that's what you're just looking at. And I use 20 for that. You can use the other on balance flow indicator as well. Then for mobile, because you don't get CMF for mobile, a good alternative is your money flow index. It's not as accurate, but it's still reasonably good, but it's not as accurate as the CMF. All right. So as you push that car upward, it gets to a point where your strength can no longer sustain it. And what happens? The rate at which you are going up starts reducing. And then it gets to a point where you can no longer even go up at all. And so what happens? You stall, and then whatever thing you have been pushing will likely start coming back down the hill, except more people or a renewed bout of strength comes in to do what? To push it further. So that's the same thing with price. If price is going up, then what is needed to sustain that price going up upward direction? So more money needs to be coming in in the buying side. More money needs to be coming in the buying side. More money needs to be coming in the buying side. The moment and the more it goes up, the more money is required to keep it going up. But it gets to a point where the money that is required to keep it going up is no longer there in the market. All right. That money is no longer there in the market. So what do you notice? You begin to see price begin to do what? Slow down. And that is what we'll now start seeing a difference or a differential in the momentum. Start seeing a difference in the momentum, which is easily now detected by something like your TDI. All right. So that will start showing in a momentum indicator like your TDI, your RSI, your stochastics. But before this happens, there should already have been a change or a divergence in volume. So the first thing is that the money is no longer sufficient. Then what happens? A deceleration follows. So the momentum is no longer moving as fast. And finally, what happens? It gets to a point where the main people that are there says, see, there's nothing we can do about this thing again. We can't push this thing further. What happens? They pull out, and what are you expecting? A drastic fall. The same way, if price is heading down, we need to see volume coming in on the selling side. More people need to keep selling. More people need to keep selling. More people need to keep selling. More money needs to be pumped into the selling side or into the seller side. The moment this is no longer happening, what will happen is the rate at which price is falling will start slowing down. And eventually, except new people come in, new money is pumped into that seller side, the trend is likely going to do what? Reverse. All right. So when we are trading and we've already seen price moving up, For instance, let's say we're in a bullish order flow and we go to the 4 hours, we marked up our charts, and we come onto the charts and we suddenly see a difference in price action, and what volume is telling us. Really, but it just the possibility we are back in trend, escape most manipulations that will happen in the market. For instance, this week I warned us to be very careful of the dollar pairs. Why was I saying so? Now, if you go to the USD index, so from last, this was your volume, came into the new week, is what you are seeing. So why price still came down? What do you notice? Your volume indicator has already pushed up, telling you be wary of further selling. There is a possibility that price is about to change direction. So these are things you want to be wary of before it changed the last time. Notice a difference in what volume is doing and what price is doing. Sometimes it can take 2-3 days for this thing to play out. Seriously. So that's why I said you don't just jump on your chart and say, yeah, okay, yes, there's something different that is going on, and just you beware, something might be up in the market. So if I see this, what am I going to do? If I want to keep buying, I can keep buying, no problem. But it tells me that I should be on the lookout. On one of these days, they are going to give me a confirmation of the sell. And one good thing about the institutional order flow as was taught is that we know what we are looking out for. So on the 4 hour basis, you are looking for the break of your what? You are looking for a break of the last order block you had, whatever direction you are trading. To give us too much info, but it's still based off the same ideology that the uh, trading with institutional market flow, institutional order flow is all about. All right. So it's still a breaker. We're still looking for a breaker, but let's just trade on the 4 hours for now, so that we don't get ourselves too confused. So, but once you see what volume is coming down, your price is still pushing up. It tells you somewhere close, usually within about 3 days, 3 trading days, you are going to have a possibility of a reversal. All right. Will this happen every time? Not exactly. Nothing. We're going to sell our house and sell everything we have and use it to trade. But it will happen more than 85% of the time. So, and for me, that's extremely good. That's extremely good. So I do this on the 1 hour. The reason is what we are comparing, or where you are going to be, things you are going to be comparing, is the remember what we are looking at when we are looking at conditions to buy or sell on the order flow. We are looking at previous days highs, right, and previous days lows. So if on any given day I am coming to watch what price is doing when it gets to the previous days high, this is the high of this day. So the following day, when price gets to that high, I'm looking at what it is doing. All right. So at this point, I can see a difference. All right. So price doing what? Reversing. So what that means is if I'm buying, I immediately want to tighten my stop loss. All right. The moment I'm in profit, I want as quickly as possible, I want to move my trades to break even. Why? I have seen the possibility that there might be what? A reversal. All right. So will it happen immediately? No. But I will keep waiting. For those who are new, who don't know anything, one easy way to know when this is almost formed is when you have a what? You have a complete break in structure. So on this day, to show you what I mean, you have a high here. The next high that is created here, what happened? What do you notice? Your volume is still lower. But am I going to jump into this? I'm not going to try to start looking into this thing until I get a what? A lower high and a lower low. Once you go to your 4 hours, most of the time when you have that, you would have had a breaker. All right. So I want to see a breaker on the 4 hours and a confirmation and a lower low on a subsequent day. All right. So this is just to explain something. So on US oil, for instance, we're in a bullish order flow, and I said I was going to wait for price to create what? A higher high, HH, that's the meaning for those of us who don't understand some of these acronyms. I was going to wait for a what? A higher high and a higher low. So once this is created on a particular day, a higher high and a higher low, when I am looking to buy, that is a what? Confirmation. Once my order flow had already turned bullish. So that's where I'm sure that I'm not in a stop hunt. All right. If I am selling, so one thing I like the USD pairs for. I'll start with sorry for that. I don't know what's my can everyone see my screen now? My network just went off.
Yeah, we can.
Okay. So once I see this happening, I'm looking for what? A complete break in this. I want to see a higher high, a lower high and a lower low created. And when I see this happening, I want to go to the last order block has been what? Broken, which is what we are looking at when we are trading institutional order flow. Once I see that, usually when you get this kind of reversals, they are sweet. When I mean real sweet trades. So there are things that you can almost hold for. Generally, if I get them, I'm trying to look at holding for about 3 days or thereabouts. All right. So and someone that I know how he does this, he's going to wait until there is a complete break again in this thing. Sometimes that makes you lose. Personally, once I get to about 5 hour or 7 hour in any trade, I get out. No matter what I feel again about the trade. But there are some people I know that, you know, if you are like Bishop, that you can hold a trade for 2 weeks. I can't remember the last time I held a trade for 2 weeks, but if you can hold a trade for 2 weeks, I generally don't like holding trades over the weekend.
I'm
Try this
still
period.
learning, though.
I generally don't like holding trades over the weekend during this period. So most times I close out on Fridays and want to see what will happen on Monday, Tuesdays, and then getting again. But if you can just do that, then usually when you get distance, you are likely going to get a major trade when you get this. So now, one thing about the USD index, and for those of us who trade a lot, see, you don't have to trade so many pairs. I was telling Bishop, I said, if you had been trading institutional order flow on just EU, GU, UCAD, NU, AU, and EG in the month of March, and you were using 0.5%, using there's a way I trade anyway. So, but if you are doing that, you would have made nothing less than 20% in the month of March using 0.5% risk per trade. So imagine if you are using 1%, 2%, all right? So you don't have to trade so many things. And I trade those things because they are less likely going to give you irregular market behavior, right? And it's monitor of the USD index, what they are doing. So go to dollar pairs and then start looking out for the best pairs to trade it with. The market will show you, your charts will show you the best pairs to trade with. If you don't know, if you can't see it, you can ask Bishop to give you a CSA indicator that will show you the currency strengths at each particular point in time. And just do it. After a while, you just get to see it by yourself. Let me take this back. So if I notice a discrepancy in what volume is doing, what next do I do? All right, so once I do that, I looking up for. Okay, so this is, you see that Euro USD is mirroring the same thing we see on the USD index. All right, so when price created this lower low, what do you notice? There's a difference. So while price has come lower, your volume is what? Moving up. It creates another, if still remember what I told you about, don't just buy because this has happened. Now it creates another low. What do you still notice? Volume roughly the same. So what are you now looking for? This is where you become very wary. Look at remember what I told you about deceleration, right? So volume comes in, you see this moment your TDI does not show it. Immediately happens. Your TDI is not showing it. Your TDI is still telling you that you have a lower low, but volume has moved. The next time that price drops, what do you notice? Your TDI shows you that divergence. Right? So volume moves, TDI or momentum does what? Follows. All right. So that is basically how it works. Sometimes the two of them can happen at the same time. Sometimes they can happen exactly at the same time. For instance, coming in here, what do you notice? This is your high. Create a low. Moves up here, does what? Creates a lower one. What do you notice? Your TDI shows you the same thing. This is the high of the day, somewhere around here. This is the high of today. Volume and TDI are already showing you the same thing. So sometimes it can happen simultaneously, sometimes it doesn't happen simultaneously. But usually your volume will usually start showing up these things earlier than your momentum indicators sometimes. Now, all these ones, these are all the Williams indicators. Most times you don't need, just need one. So you can choose either to use the awesome oscillator or the awesome accelerator. So for what we are doing this afternoon, I'm just going to be using the awesome accelerator. So it does basically the same thing. It comes with, you can find it under B Williams. All right, accelerator, oscillator, awesome oscillator, find it there. All right, so they are just basically B Williams indicators and all those things. So I just use it as confirmation. Your TDI is usually enough. I just use it as an extra confirmation of whatever thing I'm seeing. All right. So, but usually TDI is usually enough. For me personally, at the point I don't even bother myself so much with it. Really, if I see something that happened with my CMF and my TDI is already showing me something, I get a break in structure. That's all. I'm not for those. If you're still gaining confidence in the strategy or in what you're seeing, it doesn't it doesn't kill to have uh, multiple confirmations of what you are doing. So once volume shows you what it has shown you, there is a difference in between what volume is doing and what price is doing. Then you want to start looking at your momentum indicators. They should start showing up. Remember, we are doing this on the 1 hour. You can also do this on the 4 hours. When you get it on the 4 hours, wonderful. Then come back to the 1 hour. And it is you will see it in very, very clear terms. Why do I say that? Sometimes some of these things will not show up very quickly on the 4 hours, but if you're on the lower time frame like the 1 hour, I don't like doing this on the 15 minutes, you get so many fake outs. So but on the 1 hour, the 4 hours, when you get a divergence in what volume is doing and what price is doing, what that means is that the big boys have started pulling out money. Big boys have started pulling out money. What that means, see, for price to fall down, what it just simply means is this: some people are selling. All right, a lot of people are selling, and not much people buying. All right, that's just what you have. There's so much selling pressure, so much selling pressure coming. So what do these market makers do? They start falling. They induce all the other people. This trend is a strong trend. It's going down, and they themselves start doing what? They start taking their profits. As they are taking their profits, what happens? The retail traders are still selling. So price is coming down. They are selling here. They start buying. So as all these retail traders are selling, I don't know, is the rain or did the rain also affect MTN? Hey, well, all right. So once I see, can everyone hear me now? Sorry, I went up again.
Yeah, we can.
Okay. So first thing, don't forget where we started from. See, one good thing about the MT4 is that you can have multiple templates. All right. So first thing, I see a discrepancy in what volume is doing. I like to use my CMF mainly for this because this guy lags a lot. Unbalanced volume, it lags a lot. So um, I just put it here for extra confirmation again. It should show up. It should really show up. It should show up. But mainly I use my CMF. So once I see what my CMF is doing, this is where you find me. Oh, you said the wrong one. Anyway, you can use any one. You can really use any one, but I usually prefer using the accelerator. based on what we just discussed. It shows you what accelerations, decelerations. That's just basically what it's showing you. So based on that, I like to use it more than the awesome oscillator, which is more like your average momentum indicator. So once I see volume doing something different from what price is doing, I start looking at momentum. I want to see a possible difference in what my momentum is seeing. Once I see a difference, what that means is start watching out for a breaker. It might happen, it might not happen. Stay on, you're not going to buy. At this point, I'm a seller. At this point, I'm still a seller. But while I am selling, I am wary. All right, I'm wary. So once I sell, once this trade moves into profits, immediately I'm going to move. This is not the time to wait anything. I'm going to move my stop loss to break even as soon as possible, because I already know that there is a possibility that this whole trend will reverse. Now, there are some times that even though volume has started doing this thing, something might happen in the market that changes immediately what these people believe should be the fair value price of that particular pair. So that's why I said you don't just immediately assume, okay, I've seen this and immediately jumps. So something can happen. Coronavirus can appear. Iran and US can start something, or anything can happen, and it changes fundamentally the way they are looking at what they are looking at. So what is going to happen? Most times they will hedge out their trade. So even though they bought here, they're going to sell. All right. So it's called they hedge out their trades. And so at that time, this trend can still go lower for a little bit longer. All right. And if they still feel they can still collect more money, accumulate more money from people here, why not? Continue going down, get more people to enter this trade. So it doesn't mean that once you see a divergence in volume, you jump into the trade. No. It doesn't also mean that once you see a divergence in momentum, you are going to enter the trade. No. You are going to wait, still wait for your what? Your breaker. You're going to wait for a break in structure. All right. So at this point, I'm still a seller. At this point, I'm still a seller. But what am I expecting? That if this price is truly going down, I'm not expecting it to come and be breaking these highs. All right. So if it sets a high on a day, I'm not really expecting price to come into it. There is an exception to this rule, which I will mention in the next 5 minutes. But generally, I'm not expecting price to come into this high of the day. I'm expecting price to do what? Break the low of the previous day. All right. So I'm expecting a break in the previous day. 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 The moment I don't see a break in the previous day, I am cautious. The moment it breaks the high of the previous day, it didn't do that here. But the moment it breaks the high of the previous day, quickly go to your 4 hours and go and check, is there a breaker? Most times, 8 times out of 10, you're going to see a breaker. And of course, that tells you what? The momentum has done what? Changed. Occasionally, you will just get a straight one. Like, price will just move in the opposite direction immediately, give you a higher high and a higher low. It tells you immediately, this one, they are not waiting for anybody, they have changed direction immediately. So just go to your 4 hours, wait for a confirmation by a breaker, and take your trades to the opposite direction. When you catch these trades, one easy way to ride it out, one very easy way to ride it out is this. Right? So where am I looking at now? This is where this whole move originated from. All right. So it created at this point, this day is where we have confirmation of this move. Why? Got that higher high, higher low. All right. So from that time on this particular day, when price trades lower, I will not be expecting it to take out the low of the day here. When price rallies up again here, I will not be expecting it to take out the low of this day. Price rallies up again, I will not be expecting it to take out the low of this particular day here. Price rallies up again here. If it is coming down, I'm not expecting it to take out the low of this day. When price high of this day, if volume is not going higher, become careful. All right. So here, I notice that price is not, this is not going what higher. It tells me be careful. All right. So let not be like as if I'm cherry picking. All right. It tells me be careful. But it doesn't do what? It doesn't break the low of this day. So I'm not bothered. Price, I'm still a what? I'm still a buyer. What do you now notice? Price eventually now comes upwards at this point. And the volume is higher than this point. So it has changed. So that's what I mean, that the fact that volume has shown you this does not mean immediately you jump into the opposite direction. Volume is going to give you an indication, and then you are going to wait for what? A deceleration, which will be shown up in your momentum indicators. And then you are going to wait for a break structure. So at this point, I'm expecting price to come to this day and do what? Create a higher high. It doesn't do that. It also doesn't give me a lower low. So I don't know what they are doing. All right. I do not know. At that point, I do not understand what they are doing. At this point, it creates a lower high than this day and also creates a lower low. At the end of this day, I am simply going to go to my 4 hours and see whether a breaker has been created. So this is the 31st of March. Let me remove this Bollinger Band so that it doesn't. It's confirmed. Okay, so 31st, oh, sorry, 31st of March. So we are looking at 31st. All right. So what was the last order block that was created before this high? This is what we are looking at. So this is what we are looking at. All right. Now, I want price to really close below this. Even though price ran below it, all right? Even though price ran below it, price did not close below this guy. So I'm still, this was the reason why throughout last week, even though I had seen this, I did not trade Euro USD. Because I really wanted price to close below this guy, which it eventually did here. All right, on the first. So later on the first, it's really now closed below. Let's now see which one again. So what do you notice on the first? It continues doing what? Keeping in line with what we expect. Lower high, lower low. And this time around, you have a confirmed break on the 4 hours. So on this day, I'm a seller. All right. So from this day on, I'm a seller on Euro USD. All right. So until now, as of yesterday, Euro USD has started showing signs of something funny going on here. Would we get a change next week? I don't know yet. We'll see what the week brings along with it. If you look at what's it called, your USD index, I'm not really seeing, I'm not really feeling it yet. Right? There's a possibility, but it's still a very mild one. So I want it to really show up here. All right. So I really want it to show up here before I am convinced of that. Let me use EG as well. So EG, got this. So price, this was the first intraday high, created this that was lower, pushed up here to create this. What do you notice? Your volume has started diverging. All right. So from this day on, I am what? This is the 19th of March. I start becoming very wary of what? Buying on EG. I start becoming more careful of my buys on EG. Now, however, even though this broke structure at this point on the 1 hour, it really hadn't broken our order flow on the 4 hours. All right. So this was the last order block we had. So price came to it and did what? And ran up. So even though there was a week out, I actually wanted it to do what? According to our rules, wanted to close below. But price did what? Price just pierced through it and ran back up. So I wasn't yet convinced about what they sell. But I already knew that I had to be what? They have to be what? Careful because of what's happened. Let's bring in the whole gang. Let me delete this once and for all. Okay. So you see this, your accelerator is telling you what? Price has slowed down. See the difference. See the difference. This is almost at zero. See the difference. And yet this one is still doing what? Pushing up. Volume has also done what? Dropped. This one is still pushing up. So what am I waiting for? Lower high, lower low. But this time around, it did not break my order flow on the 4 hours. So what is happening? I'm going to be still waiting for this order flow to break. But from this time on, immediately I saw this, all this buying here, my head did not enter inside because at that point I was very suspicious of any further buys. Now this was another reason why I was suspicious of the buy. Why this was doing this? Because you see your volume, and your volume actually pierced slightly lower. So this meant all these buys were tricky buys. All right. So price comes into the next week. So on this kind of day, this was Friday, I'll be waiting as usual. I don't trade on Mondays. I generally don't trade on Fridays as well. So on Tuesday, I'll be waiting to see what this thing will do. If we are going to get this, I'm waiting for a break of this guy. So the other block was somewhere here. So the moment we get a close below that on H4, that is your signal to do what? To get in. Right? That's your signal to get in. And that close actually happened on when? The 25th. All right, so on the 25th, we had the final confirmation of that. On 25th, we had the final confirmation of that. So from the 26th, This is when I started selling EG. So it was Thursday. This was the first trade I took on EG on this. Then we come into the new week. The week we just rounded up. This was Monday. I don't trade on Mondays, so I missed this. It's possible. You can do that. Miss this. On Tuesday. So if this trade is still valid, what am I expecting? Lower high, lower lows, lower high, lower lows, lower highs, lower lows. So if I just see this on Monday, I just see it lower high, lower low, sweet continuation of the trend. Except if I look at this, this was where I was a bit uncomfortable on Monday, and I see that volume has pushed. It looks as if volume is now moving to the upside. All right, it looks like volume is moving to the upside, but I have not gotten what a break in structure yet. I have not yet gotten a break in structure. So I am still in this trade. All right, so I'm still a seller. I'm still in this trade. I'm still a seller as far as EG is still concerned at this point. Why? It's still giving me what? Lower highs, lower lows. So we come in here, we get a trade Monday, Tuesday, Wednesday, lower highs, lower lows. I didn't take this because of this thing that happened here. I didn't know what caused it. My stop loss would have been too wide for me. So I took this. For those who know anything about the market, this was what within divergence. So this is how you know when there is a continuation. If your volume is pushing up, while price is still lower than this guy, I said I won't talk about this, I'm still talking about it. All right, I'll just give it out. So while price is still lower than this guy, you have what? A hidden divergence there. All right, that's a sweet confirmation for a trade. All right, so it tells you this downward move is continuous. We are continuing it. All right, so money has pushed up. It tells you that money has gone in for a large buy, and suddenly what happens? Creates a lower high, whereas your indicator is creating what? A higher high. What they just did is this: they pumped in a lot of money, started pushing this thing up. Some people are going to run in thinking this trade are continuous. Very quickly, they will pull out a whole lot of their money, push it up again, and then finally go down, which is what you see here. Quickly, just do it quickly, boom, boom, out. All right, so that is now we can ask questions. If you have any question on this, you can ask. So, but basically, when you're looking at this, you're looking at what? A volume divergence. Then you start looking out for what? A momentum divergence. Then a break structure. And once you get your breaking structure, you pull your trigger. Why do I have all these lines here? Personally, if I'm going to sell, I want price to be above my pivots. That's not a discussion for today. So don't ask questions in that line. All right. So, but your daily pivot, if you know how to calculate it, it's based off yesterday's price action. So I generally want my price to be above my pivot to have a good risk to reward ratio. So if you have any questions, feel free to throw them up. Spent too much time already. You can go up and mark up your charts. If you need, I believe most of us already have the TDI. The accelerator comes with MT4. The CMF, you can ask either I or Saraji, you get the CMF, or you can go online and find it. All these indicators are still available on TradingView for those of us who prefer using TradingView. Leave this guy alone. It's just for trading. This is what it's for trading. It's easy to just set your stop loss. So while I'm waiting for questions, for those of us that have IC markets, hot forex, and all those things, you probably want to get their premium tools. It will help you. Those of us that don't know how to find it easy to use, find it difficult to use position size calculator. So all you just need to do is control click inside here, and it will ask you what's your stop loss, what cash rates do you want to use, or do you want it to be a percentage of your equity, do you want to be a percentage of your balance, blah 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 blah. And let me say I choose 24 pip stop loss. Let's say I'm using 22%, that will be $20. It immediately tell you this is what your lot size should be. Once you click set lots, the lots will appear here. If you click sell to sell this lot size, you click buy to sell this, to buy this lot size, and so many other things. So, but that's just by the side. So, any questions before I hand over back? I will call it a wrap. Any questions?